Today is the 26th of August, 2014, and this is episode 139. This program is intended for informational and educational purposes only. Cryptocurrency is new, highly experimental, and we're not experts, just obsessed companions walking the road towards a more peer-to-peer future. Welcome to Let's Talk Bitcoin, a twice-weekly show about the ideas, people, and projects building the digital economy and the future of money. My name is Adam B. Levine, and today's episode of Let's Talk Bitcoin is a little special. We're talking about Appcoins, and there's two sides to every story. A Lincoln Douglas or LD-style debate is a structured way to argue the merits or lack thereof of an idea or statement. The prompt for today's event is, quote, Appcoins can develop a value in the market and maintain their value over the long term should their associated application gain adoption by users. This episode hasn't been edited for content or delivery, only production, music, and titles. There's no moderator, but I'll be serving as the timekeeper. Here's the schedule for a normal Lincoln Douglas-style debate, and thus the schedule for today's event. We start with the affirmative team. They make the argument in favor. That's the team making the case that the prompt is correct. They start with 6 minutes, and then the negative team may question or cross-examine the affirmative team about their case for 3 minutes. After the cross-examination, it's the negative team's turn to make their case and try their best to deconstruct the affirmative's arguments. They have 7 minutes to do this. This is followed by the affirmative team questioning or cross-examining the negative team on their case. They have 3 minutes. The affirmative team then has 4 minutes to rebut any points they want to reinforce about their own case or deconstruct the negative team's case. Then it's time for closing statements. The negative team has 6 minutes to tie up loose ends and summarize their case, and the event concludes with a 3-minute final statement from the affirmative team. Ideally, this will take 32 minutes, with each team having 16 at their disposal. The affirmative case and the subject of today's debate is, quote, Appcoins can develop a value in the market and maintain their value over the long term should their associated application gain adoption by users. Both sides have agreed that this is the only question under discussion at today's event, so we hope to keep things very focused. Teams consist of 2 speakers. There's no restriction on how time is used by each team, but time runs continuously once the segment has begun. During the questioning segments or cross-examination, the questioning team has control of this time, but it counts no matter which team is speaking. On the affirmative team, Tom Ding is the founder of Coinify.com, a protocol-agnostic, token-based crowdfunding platform.
Hello, everyone. This is Tom Ding from Coinify.
Thank you. David Johnston is a co-founder of BitAngels and managing director of the Distributed Applications, or DApp Fund.
Hey everyone, David Johnston here from the Decentralized Applications Fund.
On the negative team, Daniel Krawis is the director of research at the Satoshi Nakamoto Institute.
Hey there.
And Pierre Rochard is an accountant at BitPay and treasurer of the Satoshi Nakamoto Institute.
Looking forward to the debate.
Thanks to everyone for taking the time to have this conversation. I'm really looking forward to this as well. One more point of clarification. Both teams have agreed on the following definition of Appcoin for the purposes of this conversation. Quote, Appcoin, a digital token built to be the exclusive or preferred means of accessing a specific application's features. At this time, are there any questions from either team?
No.
Nope.
We go to the affirmative team then. You have 6 minutes to make the case that, quote, Appcoins can develop a value in the market and maintain their value over the long term should their associated application gain adoption by users. Your time starts now.
Hey everybody, this is David Johnston. I'll be speaking in this section for the affirmative team. We believe that an Appcoin can sustain its value over time, provided its underlying application gains adoption. The function of the Appcoin can be designed as a core part of an application's feature set, based on solid technical and economic justifications. We will show that Appcoins are not a new phenomenon, unique to cryptocurrency ecosystems, but in fact, there is a tremendous surge in the use of specialized currencies associated with specific applications over the past 2 decades. Today, there are literally thousands of specialized currency systems, virtual currencies, reward points, and similar systems operating in countries throughout the world. We believe the reason these Appcoins, gift cards, specialized currencies all maintain their value over time is because they provide unique incentives and benefits to their users and thus develop a network strength that drives adoption. So let's delve a little bit into the evidence in the wider economy that supports this proposition. Today in the global market, gift cards and most virtual currencies, which by their very nature, are specialized currencies that are only usable within the specific game or merchant's ecosystem, are $100 billion plus industry. These are examples of many real world ways that the Appcoin model already works in action and have proven to be highly successful. Let's take, for example, the frequent flyer model, where a customer spends cash with participating businesses who issue reward points in a specialized currency that can be then used to offset future purchases or provide special privileges. These systems clearly have advantages for merchants who have widely adopted them, and consumers freely opt into these arrangements and seek to leverage them for receiving discounts or other special rewards. The fact now we see this model spreading into the cryptocurrency ecosystem shouldn't be surprising. In the past 12 months, we've seen a surge of Appcoins emerge onto the market, including Mastercoin, MadeSafe, Ethereum, Storage, Swarm, and many others, whose combined token marketplace value now exceeds tens of millions of dollars. Also want to look briefly at evidence we have from experts in this area, and I'll start with Satoshi Nakamoto and his thoughts on this proposition, or at least his thoughts in general on related topics. In one of his last posts towards the end of the period in which he was actively commenting, Satoshi commented on a thread called BitDNS and Generalizing Bitcoin. On December 9th, 2010, Satoshi said, quote, "I think it would be possible for BitDNS to be a completely separate network and a separate blockchain," end quote. Here, Satoshi is recognizing the technical reasons why it would be advantageous to have a separate blockchain and thereby extension separate tokens involved in this BitDNS system, which would later become known by the Namecoin project, involved in DNS services with its own blockchain. He followed these comments up the next day on December 10th, 2010, by saying, quote, "It will be much easier if you can freely use all the space you need without worrying about paying fees for expensive space on Bitcoin's blockchain," unquote. Here, Satoshi, the foremost expert in the world on the topic of blockchain technology, clearly makes the case for why different applications would benefit on an economic cost basis by having their own blockchain and by extension their own coins associated with their particular application. Taken in hand with similar views expressed by Peter Todd and other Bitcoin Core developers, that there are in some cases technical advantages for applications to use their own native tokens. Those technically proficient in the ecosystem consider Appcoins can maintain their value over time, provided these systems have technical advantages that attract user adoption. In fact, the assertion, and contrary to the belief that currency is an ultimate winner-take-all type of event, research has recently been put forward that studies exactly this point, which was recently released by Wies in 2014. Other things that are important to consider in this topic: concentration and rewards of incentives are important and build into the Appcoin the advantage of network strength. For those that have studied network effects, they will be familiar with the concept there are differences between network size and network strength. This can be shown clearly by looking at the levels of incentives of an ownership of cryptocurrency as correlated to the increased network strength when it comes to applications adoption. Consider the benefit or advantage to a Bitcoin owner is extremely small with a particular project in the Bitcoin ecosystem succeeds. But the effect is extremely large when an owner of a particular token benefits based on the success of that application, where this develops a high network strength. We can see this in traditional applications where Facebook, for example, outcompetes MySpace, even though MySpace had a network size advantage because of its greater network strength advantage and an advantage of its model. In conclusion, the evidence for the affirmative of the proposition is extremely strong, and we believe that Appcoins have in fact already developed the value in the market and can be maintained over time.
And that is time. Thank you very much to the affirmative team. Thank you, David Johnston. So that concludes the first 6-minute segment. Negative team, you have 3 minutes to cross-examine. Your time will begin as soon as a member of your team starts speaking. And as I mentioned, you can ask questions of the other team. They are allowed to respond, but you can cut them off if you just want to move on to something else. It's your 3 minutes, and as soon as it starts, it has begun, does not stop.
Thanks, David. I think you stated your case very well. My first question is in regards to existing gift cards and specialized currencies. You specifically mentioned frequent flyer points. So is your argument that these existing models, the reason they maintain their value is the same reason that Appcoins would maintain their value?
My argument is that it is a similar model and that it's used in the broader market. But obviously, Appcoins have differences in the way in which they're technically implemented.
So you don't believe that frequent flyer points or gift cards maintain their value for the same reason that Appcoins maintain their value?
I believe it's a similar reason. They're used within that particular ecosystem, and it's used by that particular merchant. They offer advantages and privileges to the holders of those tokens. They build value because there's loyalty associated with using a particular application. So I believe there is overlap.
Doesn't your metaphor or overlap break down when we start examining specifically how they maintain their value, in the sense that a gift card maintains its value because the merchant backing it is promising to redeem it for a fixed amount of value, whereas an Appcoin makes no such promises?
Well, we can see already that Appcoin prices vary over time, but that doesn't mean that they don't have value. It means that they have a different value and a dynamic value. And the analogy I draw here is to the beginning stages of Bitcoin. It had a lower level of liquidity.
So, sorry, let me cut you off again. And then, would you rather own a gift card or cash?
I would rather own a gift card if I get it at a discount and it has other loyalty benefits, and I want to attend that particular merchant.
So for the same amount of value, you would rather hold cash than a gift card?
It depends on the gift card and what I desire.
Okay. And then same for frequent flyer miles, I'm assuming?
I would be happy to accrue frequent flyer miles if I'm a frequent traveler, and that's valuable to me.
Have you ever purchased frequent flyer miles to book a flight?
I have not, but I've earned lots of frequent flyer miles and used them.
Okay. That concludes. Well, actually, I have a question. Could you explain the research that explained that currency was not winner take all?
Sure. Just say briefly that it compared the different complementary currencies out there that exist today and showed that over time there was value in having specialized currencies.
And did it state that there's no trend towards having one dominant, 80-20 market split between the dominant currency and these other niche products?
It covered that in some detail, but not great detail.
And that is time. Thank you very much to the negative team. Thank you, Pierre, for that questioning segment, and David for responding. I think that was very interesting. We now move to the... excuse me. Now is the opportunity for the negative team to present their essentially opening arguments. You'll have 7 minutes with which to do this, and you can also feel free to rebut any points made by the affirmative team during this point as well. Your 7 minutes will start as soon as you begin speaking. Good luck.
Thank you. Good afternoon. I'm arguing against the proposition that Appcoins can develop a value in the market and maintain their value over the long term should their associated application gain adoption by users. I will first say a few words about the nature of money and why a lower price for Appcoins is preferable in general to all users. Then I'll discuss some possibilities that would enable people to lower the price of Appcoins. And finally, I'll explain why this is inevitable if my ideas about the nature of money are correct. To argue that a cryptocurrency is a good investment, in other words, that its value will go up over time, you need to explain why people would hold it, not why they would spend it. The most important thing to keep in mind is the issue. It is easy to explain why one would sell a coin, not so easy to explain why they'd hold it. However, it is the holding that causes it to have a price, to have a value, not the spending. If people hold it for a longer time before spending, the price has to go up. That represents a greater demand for the coin. Whereas if they hold it for a shorter time before spending, then the price has to go down. In order to argue that Appcoins can sustain their value, you have to convince me of a lot more than that something valuable can be bought with it. You have to convince me that people are going to spend time holding the Appcoin before they spend it. People can hold their Appcoins for longer or shorter times for reasons that are totally independent of the popularity of the app. So I will now explain why people do hold cash and why an Appcoin to provide that same value that cash does. Now, the reason ultimately that people hold cash is to take advantage of unexpectedness. This is why great investors emphasize keeping a portion of their portfolio in cash, rarely become totally invested in anything. It is impossible to predict the future perfectly, so it is generally a good strategy to stay somewhat nimble or liquid. That's what cash is for. And you can see that this is true because just imagine if there were no unexpected random opportunities, if that was not something that was going to happen and we knew the future quite well, then it would make no sense to stay liquid and to hold cash. You would want to go into any kind of investment, no matter how low the return was, rather than hold cash. You'd always prefer a productive asset, dividend stock. I don't see other explanation for sustained value on the market to any cryptocurrency other than that. I don't see that anyone else has provided any either. Pay no dividend and no interest, and there's no expectation that they ever will. They are not productive. The only reason to hold them is to be liquid. However, an Appcoin is not going to be very good at helping people be liquid because there are always better options for being liquid, like Bitcoin. A bigger network tends to be better at providing unexpected random opportunities because it brings more random people together. People who try to stay liquid in the bigger network will systematically benefit over the ones who choose the smaller. Furthermore, the greater the disparity between two currency networks, the greater the superiority of the bigger one, and the more reason people have to abandon the smaller one. Even if the market between two currencies is very liquid, they are never indistinguishable, and there are always transaction costs that cause one network to grow at the expense of the other. Even if the smaller currency can be spent in some special way, that does not mean people are going to want to hold it before spending it. All of the time spent holding the smaller coin, the coin in the smaller network, is an opportunity cost. People are going to prefer to stay liquid as long as possible in the big network and then move to the smaller one at the last possible minute, thus reducing its price as low as possible. Now, you might say, why invest in any cryptocurrency at all then? Bitcoin is less liquid than the dollar, so why should anyone hold Bitcoin at all? In the short term, yes, more liquid than the dollar, and I invest in it accordingly, is because Bitcoin has overall transaction costs that are order of magnitude lower than using dollars. Using Appcoins instead of Bitcoins, on the other hand, necessarily entails higher overall transaction costs. It is theoretically possible that an Appcoin could, in a manner unknown to us, have lower transaction costs and thus higher expected liquidity than Bitcoin. And if it did, it should grow to defeat Bitcoin. So its price still doesn't move with the popularity of the app in that instance. Its price instead increases it increases exponentially, like Bitcoin. An Appcoin whose value increases because it is better money than Bitcoin is more coin than app. I will now explain the ways that users could learn to hold the Appcoin for shorter amounts of time, thus reducing its price. First, you can just fork the app to use Bitcoin or simply upgrade it. You can do this. Even the developers can do this after they realize there would be demand for such an upgrade. There's no way to guarantee that the app will always use the Appcoin. It can always be freed, and there's always an incentive to do so. Even if this did not happen, someone could provide a service by creating a front-end app that enabled people to pay in Bitcoin, and then the front end would handle all of the currency exchanges. That would enable people effectively to hold the Appcoin for the shortest amount of time possible. Would make the Appcoin invisible to the user. And this would enable people to hold the Appcoin for the shortest times possible. Something like this would enable the coin to become so illiquid that it would effectively be useless. I would conclude by saying a little bit about why the past history of altcoins may not appear to bear out what I am arguing, and why I expect my predictions to be successful nonetheless. I expect people to behave differently in the future than in the past, because I believe people tend to learn better strategies as they get more practice. People are always learning, and this is usually the reason that the future is different from the past. The more people learn to follow my arguments, and the more obviously correct my arguments will appear, the more that history will bear them out. Right now, it's still possible to create altcoins and make money. There are lots of people who have not learned that holding Bit is the stable strategy in the cryptocurrency game. As more people learn, it will become impossible to make money by creating an Appcoin. And this concludes my talk.
Thank you, Daniel. That concludes this segment. Affirmative team, you have 3 minutes to cross-examine the negative team on their case. Your time starts as soon as you start speaking.
Hi, this is Tom Dang from Quantify. Daniel, I have a couple questions for you. And I think an Appcoin could be a fully optimized, integrated with a specific application environment, and therefore offer a significant technical advantage, including speed, capability to escrow, lower transaction fees, lower overall overheads, et cetera, over Bitcoin. And just like the legacy financial world, gift cards or stored credit has a strong advantage over credit card, primarily because of lower transaction fees, lower fraud rate, and et cetera. Why wouldn't that same logic apply to Appcoin over Bitcoin?
Well, a credit card is backed by dollars or by some specific amount of goods. That's why it has value. Whereas an Appcoin is not, or at least none of the ones that I have seen are proposed to work that way. So those are totally different things. They're economically, it's like the difference between a banknote and the gold backing it.
But why wouldn't you think that an Appcoin, for example, could have solved the problem of Bitcoin's mining fee, expensive mining fee, centralization problem, et cetera, and slow transaction speed? And that specific Appcoin is optimized for that network. That makes it faster and cheaper to transact. Why couldn't that be a significant advantage?
It's impossible for two currencies to have a stable exchange rate on the free market. If one of them has a slightly better network than the other one, that's an incentive for everybody to move into that network.
Well, you propose in your argument that the currency is a winner-take-all proposition based on market cap, but you also talk about US dollar actually have a greater network size, right? And obviously there are tons of thousands of specialized currencies, Bitcoins, gift cards, and airline miles, et cetera, all coexist with US dollar. Do you see why didn't that logic extend that US dollar should have destroyed them all, or the rest of them have destroyed US dollar? Instead, they're in equilibrium state like that.
Well, the reason there can be equilibria between currencies today is because there are legal tender laws and there are other capital control laws. There are state institutions, and of course, there's also the collusion of central banks that prevent one currency from winning out. Frequent flyer miles are totally from a currency. They're not a currency at all. They're just like a gift card. They're buy a specific good. They don't have an independent value, so that's completely irrelevant to this argument.
But why has Bitcoin and Appcoin and altcoin, all of these coexist with US dollar, and they have still gained value and not killed by big US dollar variance quickly?
Well, it is not the case that the bigger...
And that is actually time. We'll have to move on. That concludes the questioning for the affirmative team. Let's see. Affirmative team, you now have 4 minutes to rebut the negative team's case. You cannot interact with them any further, but you have 4 minutes now beginning from when you start speaking.
This is David Johnston from the DApps Fund. You say in your writings that, quote, because any Appcoin must compete with Bitcoin, there is inherently aversion to holding the Appcoin rather than Bitcoin. Firstly, I would say that the price mechanism can account for the lower liquidity level associated with holding app coins, and that this lower liquidity level does not create zero value in the app coin, but rather users will hold the app coin if the benefits of holding outweigh the reduced liquidity, just as people held Bitcoins because the benefits of using Bitcoins outweighed for them the lower liquidity levels of Bitcoins versus the US dollar. For example, the user that gets utility out of a decentralized storage system and holds tokens in that decentralized storage system in order to access it on a regular basis would rather hold these tokens than Bitcoin if he is bullish on the adoption of these tokens, and as you stated earlier, believes in the long term of that system. Seeing this technical and economic benefit, the holder may knowingly choose to hold value in the app coin that he doesn't have immediate need for, in the hope that others will come to see the technical or economic benefits of the app coin, and as a result, increased adoption of the application in the future. You say in your writings that, quote, this means that an app will always improve by transitioning to use Bitcoin instead of the app coin, unquote. However, what we have actually seen in the market is that app coins are outcompeting Bitcoin-based services that do the equivalent task. Take, for example, smart properties. There exists a purely Bitcoin-based option and multiple AppCoin-based options for issuing smart properties. And thus far, the vast majority of smart properties have been issued on AppCoin applications, for example, Mastercoin, Counterparty, and Next, and not on the Bitcoin option for issuing these smart properties. This, in our opinion, is clearly due to the economic incentives provided for the holders of these app coins that align their interests with increased usage of these smart properties, thus providing a direct reward for holders to create smart properties themselves or encourage other developers to likewise create smart properties on these AppCoin platforms. Goes back to what I was mentioning in the introduction, where it's a concentration of incentives. There's very little marginal benefit for the average Bitcoin holder if a particular decentralized storage system succeeds. It makes a very, very small difference to the overall value of his holdings. However, for the holder of the AppCoin, he sees a significant and meaningful change in the value of his assets if a particular application and platform associated with the AppCoin succeeds. And so just as Bitcoin and the ownership of Bitcoin caused there to be a huge number of Bitcoin evangelists spreading this idea and platform to their friends, AppCoins are using a similar model, and they're using this as a method of gaining evangelists that go out and talk to everyone about the benefits and the advantages of these platforms. So in this context, there's an enormous benefit to those creating AppCoin platforms to incentivize people with this early adopter incentive in order to compensate them for this effort in spreading the platform. Thank you.
That's the first time we haven't run over time. That concludes the affirmative rebuttal. Negative team, you may now respond and make your closing statements. You have 6 minutes to rebut the affirmative and summarize your case. At your start.
Thank you. Well, I would say that my opponents have not explained, not answered my challenge at all. The whole issue is people would hold the coin, not why people would spend it. But consistently, Johnston simply said that if you can spend the coin on valuable things, the coin should go up in value. That's exactly what I explained. That isn't necessarily the case at all in my opening statement. My opponents are totally confused about the difference between something like a coupon and a currency. So a currency has its own independent value. It's simply valued for itself. As a coupon is valuable because it is a contract. It can be redeemed for a specific good. That is not the case with any app coin that I know of or that has been created so far. So if you take the example of MadeSafe coin, MadeSafe coin is not redeemable for any specific amount of storage or any specific amount of time. It's not nominated in any unit of distributed storage. It's simply whatever people will accept for it. That makes it completely different than a coupon or frequent flyer miles. And it's the same. The difference is the same for any other virtual currency that has value. It's a gift card has value because it's backed by goods that are denominated in dollars by specific amounts. And even if you look at something like an in-game currency, like in World of Warcraft or whatever, that has value because there's a specific exchange rate between the currency and items in the game. And it's the same with frequent flyer miles or any of these other things. These are not currencies, whereas with an app coin, you're attempting to treat it like a currency. It's fine if you create an app coin that is denominated in specific amounts of goods that have value, but that's totally different than what's been created so far. You can't use that kind of app coin as an investment, and you can't use it to raise money. You can only use it just as in-store credit or something like that. And so I conclude by saying that my arguments have not been rebutted, and eventually people will learn holding Bitcoins is the better strategy.
Pierre, would you like to use the remaining time? There's 2 minutes and 49.
I would just add that on the subject of how long people would hold the app coin, that can be reduced to a fraction of a second, and strong incentive to reduce that to a fraction of a second so that you hold your Bitcoins, and then when you need to use this application, the application itself converts your Bitcoins into the app coin. And when you have a situation where everyone is trying to sell their app coin so that they can use the application, and you don't have any long-term hoarders of the app coin, then the value tends towards zero. And it certainly doesn't hold its value over the long term in terms of, for example, what it IPO'd at or what it's trading at today. And that concludes my comments.
The negative team has 1 minute 40 seconds left on the clock, which I guess we'll just cancel out. So we now come to the final section. The affirmative team now has 3 minutes to rebut the negative and to summarize their case, and to address any points that the negative would like them to address if they'd like to do that. Your time will start as soon as you begin speaking.
Hi, this is Tom from Quantify. I think it's dangerous and misleading to assume that a single currency like Bitcoin would dominate all economic activities and assume that it will solve all problems. I think this misconception from what I heard from Daniel and Pierre come from largely misunderstanding of Appcoin's nature and their contribution to our, and I'd like to address them here. First of all, I think we should call out a clear distinction between Appcoins against traditional currency. Appcoins, in fact, behave like a hybrid of shares and currencies. Its currency aspect is that they are fluid and suitable for payments. Users spend and earn Appcoins they use and contribute to the network. At the same time, Appcoins also has a share-like behavior in that it has limited supply and every coin represents a percentage of the aggregate demand. Therefore, the Appcoin increases in price naturally as the overall demand grows. This dual property of Appcoin is a critical difference that makes them desirable to be held against a generic currency, even though their liquidity is understandably lower. In a traditional corporate environment, we have this clear distinction of investor, employees, and customer. Investor receives shares, employee create value, customers pay in cash. In a decentralized world, Appcoin blurs the line between them because everyone on the network can create value and consume value. So in truth, I believe Appcoin represents a whole new asset class, which is neither equity nor traditional currency, but a hybrid behavior, and therefore makes them desirable to be held. Secondly, I think Appcoin is not just another currency or asset class, but also an important and critical model to fund and drive great software projects. Mark Andreessen famously said, software eats the world. I think software not only eats the world, but they really become the underlying foundation for our century, just like railway, electricity, and banking once was for the infrastructure to fuel all development. So software is no longer just something that a specific company making profits from, but should be considered public goods. So you want software to be as scalable and reusable as possible, which is what open source is for. The challenge with open source software, however, is that everyone wants them, no one's paid for directly. Taking Linux, for example, it took 20 years to get to what it is today, and it still had a lot to be desired. A big reason out of that is lack of proper funding. I think Appcoin could be a great solution to that problem. Imagine what if Linux Coin had existed today with the appearance of Linux back in 1991. Crowd sale and giveaway of Appcoins bonds the community and the developer together. Everyone is locked in and has incentive to commit resource to develop a product considered promising. Ultimately, I think no matter what we say here today, we should look at the market and the value of the Appcoins. We can say it, and we can already see the data from where the market is deciding. This time last year, we only have a few Appcoins like Namecoin. 12 months later, we already have great expended to Mastercoin, Counterparty, LTB Coin, MaidSafe, Swarm, etc., etc. They provide services from decentralized exchanges, distributed data storage. They have collectively raised $10 to $50 million from the public, and these are among the most well-funded open source projects in history. Imagine how many years would it take for these projects to occur if we're not used for funding. Imagine how many great projects we would lose if they were not well-funded. I think these are ample evidence that tells Appcoins are not only an important way of funding projects, but can also do
and that is
develop
time.
Value.
Thank you very much, Tom. I appreciate you trying to squeeze everything in there, and that was a very interesting closing statement. Thank you very much to everybody who participated in this. That actually brings us to the close of today's debate. This was a very fast debate. This format is quite quick. Thanks to all the speakers for your time and your thoughts, and to the audience for taking an interest in this more structured form of discussion. If you enjoyed this episode, send an email to adam@letstalkbitcoin.com and let us know. And if you'd like to join the conversation about this, you'll find a thread waiting for you over at letstalkbitcoin.com, where you can join the community discussion about this issue. Thanks for listening to this episode of Let's Talk Bitcoin. This episode is brought to you by CryptoKit.com and listeners like yourself. I've unplugged from the net through the end of August, and while sponsors have been great, it didn't happen for this trip. So if you enjoyed this episode, check out the show notes or head over to letstalkbitcoin.com to send us a tip in either Bitcoin or LTB coin. Today's magic word is coin. That's coin, C-O-I-N, coin. You've got until the 30th of August to visit letstalkbitcoin.com and enter the magic word for your share of the listener rewards. Content for today's episode was provided by David Crosswitz, Tom Ding, Pierre Rochard, David Johnston, and Adam B. Levine, with special assistance from Napoleon Cole. This episode was edited by Adam Levine. Music was provided by Jared Rubens and General Fuzz. The LTV platform is now open source under the name Tokenly. A link to the forum thread introducing it is in the show notes, and if you'd like to contribute to our PHP-based project, you can now earn 10,000 LTBC for every commit that's accepted into the main branch. Thanks for listening.